A recent article in the Money Tree report by PricewaterhouseCoopers indicated that the VC industry raised $12 billion during the first quarter of 2016. However, the number of investments and the amount invested was down during that first quarter by 27% to 30% respectively from the 2015 high point. Tonight's show is about the trends and the changes that may be taking place in venture capital. My name is Jim Connor. Welcome to Game Changer Silicon Valley. I have two distinguished guests from the venture capital industry. Cindy Padnos is the founder and managing partner of Illuminate Ventures, and Ephraim Lindenbaum is the managing director of Advanced Ventures. Cindy and Ephraim, welcome to the show. It's great to have you here tonight. I'll start with you, Cindy, to give us a little overview of what do you see the trends are at this time here for venture capital in Silicon Valley.
Well, the world of venture capital is constantly in an evolution. It never stands still. And if you look at the past 2 quarters here in Silicon Valley, what you'll see is, first of all, a retrenchment to some extent in response to the trends in the market. So as the unicorns came down in valuation, the SaaS companies came down in valuation, many of the VCs were out raising large amounts of capital to kind of put in the storehouse, but they became much more cautious, if you will, about how to deploy that capital.
Did they become more cautious in the follow-on round, or did they just start to think twice about how the company's doing?
I think they've become more cautious around the size and the scope of the follow-on rounds, the valuations. Early stage investing, I think, was more impacted, frankly, than some of the later stages because there's been a slowdown there more dramatically. The data I've seen shows that Q1 of 2016 was actually the lowest number of early stage investments in the last 10 years. So pretty dramatic.
Very, very dramatic. Have you seen a similar trend, or you're in a little bit different part of the market? Cindy's in one level and you're in a kind of a mid-tier, is that correct?
Sure. Well, we're fundamentally early stage and even to a degree a little bit of growth, but we're seeing similar trends. However, this is, I think we found this to be the best time in Silicon Valley history for companies and entrepreneurs to be funded. There is such a broad stack of opportunity to bring in capital, ranging from incubators, accelerators, early stage VCs, micro VCs. They're coming up with acronyms for VCs I'm not even familiar with yet. I think there's been a historic trend to look to the sort of top 10 super funds and then gauge the entire market sector around that. And I will say in the first quarter we have seen some of the largest agricultural and food tech investing that have happened in the last 2 or 3 years. And so from that standpoint, there are areas that are sort of moving forward, there are areas that are sort of moving back. As we like to say, there are a lot of boats in the water right now. We're trying to see which ones are going to float.
So a lot of moving parts.
A lot of moving parts.
So what I'm hearing you saying is that you've seen, rather than, shall we say, chase the unicorns, you're just after these new markets.
Sure. Well, I mean, there are unicorns in all. I mean, clearly in food, in on-demand services, delivery, there have been a lot of unicorns. But there's a lot of white space. And when we're seeing what typically is considered disruption in these different categories, it's opening up more and more opportunity to invest. And as we look at trends in mobility, trends in big data, information technology, and then the broader IoT space, it's opening up a broad element of different categories. And now we're seeing things like VR. A recent study just suggested that EY suggested a $150 billion enterprise market in VR by 2020. When you start to see numbers like that, we haven't even begun to see the VR boom occur yet.
No, you're right. I just saw a company come in and present a codec for VR.
Right.
I mean, a complete codec, and you're going to take an existing camera and he's going to build the chips that run the camera and allow these angles to come in and all these angles to be managed. It's remarkable stuff. So.
Same thing is happening in the IoT space. If you think about
you got to tell me, IoT is.
Sorry. So the Internet of Industrial Things.
Yeah. And
So
how does that differ then?
Yeah. So people know IoT. People know the idea of wearable devices, of your, whether it's your Fitbit or something along those lines. But the enterprise world, which is the category that our firm invests in, really has a myriad of applications as well. Those can be industrial applications, data center applications. It can be in utilities with oil and gas refining, or electrical utilities, and many other categories where you have sensors and devices that are out in remote locations. You have computers, but not everything has to be quite that smart. It can be your air conditioning unit. It can be your server. It can even be the badge that you're wearing for access control as you walk through a facility. All of those things become inputs of data, and if you think about the number of hardware servers there are, and you multiply that by all the myriad of other devices and people that are involved in these systems, it creates a data set that is unimaginable. And that's what IIoT is about. It's about finding ways to leverage that data and use it in incredibly useful ways to improve business results.
I had an experience, I just started to tell you about it. I was in Napa yesterday playing tennis at a tournament there, and I have an electric car. And I burned all my electric juice, the battery up, and plus a little bit out of the little extender. And so I found a charge station. I left the car there, and I kept thinking, I wonder how long it's going to take to charge. And I realized my iPhone app would communicate through the cloud to the car, and I could monitor. It was so convenient just to see where it was. That's kind of a small example of the IIoT. Is that correct?
That's right.
Are you involved in IIoT?
When you look at categories that are much more verticalized, for example, IIoT as we see it today has been very active in things like agriculture and food technology for many years. I mean, what we've seen is the cost to deploy has come down dramatically, as well as the whole ecosystem, right? So to your point, as you just described, you had mobility at play there, you had cloud at play there, you had SaaS at play there, as well as the whole connected device structure where you had the charging station itself communicating. So, there are several pieces. There's the connected device aspect, but then there's also the broader ecosystem around it. And it's taken a lot of these pieces to come together simultaneously to make all of that work. So when we look at verticals on the IIoT space, in our particular case, health technology is very meaningful there. Certainly food, agriculture, and sustainability like energy, as Cindy was saying, is very important.
And have you taken a broader lens at the whole market now?
Well, actually, it's interesting. We're actually taking a much narrower view of the market right now, and we're sort of verticalizing. So essentially for us, where historically terms like SaaS was an investing category, or enterprise, or elements like this, I think we've really decided, or mobility even, those are just enabling technologies today. And so what we're really looking at is the verticals, because that's where we can add expertise. So our particular firm invests across 4 core verticals: financial technology, health technology, and then ag and food technology.
So Cindy, let me ask you though, you've got a lot of experience in SaaS also. We were talking a little bit, you think some of these markets are kind of coming up or going down, is that correct?
Well, I think it's really interesting because, first of all, the cloud itself democratizes entrepreneurship. It enables people all over the world to create startups. I was recently in Poland and looking at opportunities there, the companies that are moving to the U.S. that have built quite significant companies there, very frugally, very capital efficiently, and now want to bring these products to the U.S. market. So there is an element of SaaS that is really about expanding the opportunity to be an entrepreneur well beyond the borders of Silicon Valley. I think as well, this verticalization is very interesting because what you bring to the party in those environments is domain knowledge. And so, as an example, one of the companies we recently invested in is in the CPG category, and they are taking
CPG is?
Consumer product goods.
Okay.
Sorry.
Yeah.
So they're a CPG vertical. In other words, manufacturers like large folks that people would know Kraft, but at the small end, there are organic suppliers like Hain. Happens to be quite a large brand if you go to Whole Foods, but not globally, and certainly not in your normal Safeway and other more broad-based stores. Manufacturers like that have to be able to compete, however, with a Kraft. And in order to do that, they need tools and technology and data analytics that are well beyond typically the capabilities of an organization that has to be super capital efficient. So there's a whole new suite of solutions that are being built in a SaaS world that can be delivered to small and mid-sized businesses that could never be delivered before.
This has got to be a great appeal to the Corporate Innovation Office.
It absolutely is, because what they're always looking for are ways to bring new capabilities into their organizations. I work with NTT and their innovation group here in the Bay Area, as a matter of fact, and just recently met last week with the team from Best Buy. They think about innovation differently. Their CEO is amongst their innovation group, and they actually gave me a very interesting example of how they're trying to create more innovation inside of their company, and they literally had a card, they gave me one, that was a get out of jail for free card. Okay, and what did that mean? It meant go and try it, go and do it. Don't, take risk. And that's really starting to become much more the mantra in large corporations today. It's exciting.
So I want to go back to you then. You got these 4 verticals you're pursuing. How do you make a decision? I mean, there's so many fintech companies, so many. What kind of filter do you go through? And lots of entrepreneurs are watching this show. Got to ask you that question.
Sure. From our standpoint, when we look at one of these verticals, we're looking at where our expertise, as Cindy was saying, domain expertise plays into the space, but also where there's a strong ability to disrupt. And we typically don't like that word. We prefer white space because there's a lot of white space in these categories. Cindy briefly mentioned, in the broader food processing space, in CPG and brands, and there's a lot of room that has never been there before. You can essentially eke more efficiency across the entire enterprise, right? So from our standpoint, we tend to avoid categories where you have to go into an embedded market and sort of chip away at that. We tend to look at the white space within the cycle.
Go ahead and talk about that. The Advanced Ventures Twitter handle. You get 5 broadcasts, right?
Sure, certainly. So the categories that we're involved in right now, whether that's financial technology, health, food, agriculture, and then as it extends with some of our IoT into VR and big data analytics, so we're constantly tweeting about that. So just about every couple of hours of every single day, there's great content that myself and my partners are finding out there that we like. So what you're really getting is hand-curated content, what we're rereading in the last 24 hours. And we're really lucky. We've got a great group of entrepreneurs there that follow us, and we're always looking for contact and content to follow up with.
What areas do you like to focus in, and how do you make a decision among the multitude of companies you must see?
Well, I mean, we see about 1,200 new business plans in our enterprise software world that we invest in a year.
100 a month.
100 a month, that's right. And so you have to sort the wheat from the chaff fairly quickly. We're typically, and in fact virtually always, the first institutional investor in a company. We only invest in enterprise cloud and mobile software companies. We tend to really like teams that are built with that have domain expertise in the category, and we are absolutely the most excited about teams that are passionate about their customer. So we are less likely to invest in a purely deep technical team that may be doing something really innovative technically but doesn't really understand how it's going to be applied in the market, versus a team that may come in and say, we've got some really interesting insights on a business problem that we believe needs to be solved, and we're going to figure out how to do that, but we're going to do it in collaboration with the customers that we're targeting. That's much more exciting to us.
So I'm going to ask each of you to give a little contact information if you're open for entrepreneurs or anyone to follow up as a result of the show.
The Twitter handle is @IlluminateVC. Our website is just illuminate.com. And we welcome understanding great business opportunities.
And Ephraim?
Sure, certainly. So we spend a lot of time looking at content in the category. You can follow us on Twitter, Advanced Ventures. Certainly our website, advancedventures.com, is a great place to get in touch with us. And bear with us, we're all very busy in the space, but we always try and get back to you at some point.
That's great.
Thanks.
Well, Ephraim, I want to thank you for coming in. It's been great to have you. Great to see you again. And Cindy Padnos, my pleasure to have you here for the first time on the show. I want to wish you both every success going forward, and I'd love to hear how things are going in the next 12 months.
Thank you.
Thank you, Jim.
This is Jim Connor. Thank you for joining us for this week's episode of Game Changers Silicon Valley. Each week we'll address an area of innovation that may emerge as a game changer of tomorrow. You can follow us on our website, gamechangers.tv, Facebook, or Twitter. We look forward to your continued interest and participation in upcoming shows.